The WNBA currently possesses unprecedented financial potential, yet internal divisions among its players threaten to destabilize the league's progress.
The players that are coming into the twilight of their career, they're the ones that is preventing a WNBA CBA deal from being signed because they're at the end of their careers and they're trying to get paid at the last minute, so they're scrambling.
After decades of commercial travel and limited attendance, the league has evolved into a global phenomenon. However, behind the scenes, a fundamental fracture within the Players Association has emerged, jeopardizing this period of growth. The situation has become a dispute over the distribution of new wealth before the revenue has been fully realized, creating a level of volatility that could undermine the league's long-term stability. Prior to the arrival of Caitlin Clark, the WNBA operated largely under the financial support of the NBA, often struggling with low viewership and minimal cultural footprint. Currently, television ratings and merchandise sales have reached record highs, and the league recently secured a media rights deal valued at over $2 billion. This influx of capital has turned the players' union into a site of intense internal negotiation. Veterans and younger stars hold diverging objectives for these funds, leading some observers to describe the Players Association as deeply compromised. The divide is rooted in differing career timelines and financial priorities. Veteran players, many of whom have spent over a decade playing for minimal salaries in small venues, view the current surge in revenue as their final opportunity for a significant payday. As they approach the end of their careers, they are prioritizing immediate financial returns. This group does not have the luxury of waiting for the league to grow over the next decade. For them, the next collective bargaining agreement represents the last chance to secure substantial wealth before retirement. Consequently, they have signaled a willingness to authorize a strike that would put the 2026 season in jeopardy, prioritizing immediate concessions even at the risk of the league's operational continuity. In contrast, younger players entering the league during this expansion see a different trajectory. With private charters and sold-out arenas becoming the standard, they recognize that sustained growth could lead to multi-million-dollar contracts later in their careers. They are concerned that a strike would stall the current momentum, alienate millions of new fans, and discourage corporate sponsors. Recent union meetings have reportedly been contentious, reflecting a rift between those seeking an immediate payout and those focused on the league's future viability. Tensions are further complicated by perceived resentment toward the league's new stars. Some veterans feel their foundational work is being overshadowed by the attention and commercial success surrounding newer players. This friction has influenced union leadership to push for terms that favor senior members, even if those terms risk the organization's overall stability. Meanwhile, league owners are maintaining a firm position in negotiations, aware of the union's internal pressures. This impasse has made it difficult for the union to reach a consensus on a counter-proposal. The league is also managing rapid expansion, with the addition of the Golden State Valkyries and interest from cities like Toronto and Houston. While expansion fees are significant, the players remain divided on how to allocate these resources. Veterans are advocating for immediate raises and retroactive pay, while younger players prioritize improved travel standards, enhanced health benefits, and long-term revenue sharing. This conflict between short-term gains and long-term infrastructure has placed the WNBA at risk of a lockout, a move that would be unexpected for the league's growing fan base. Union leadership remains primarily composed of veteran players, including President Nneka Ogwumike. Although the union initially showed a unified front in authorizing a strike, that solidarity has begun to show signs of strain. As the practical implications of a work stoppage, such as the loss of paychecks and public exposure, become more apparent, more players are reconsidering their positions. The fracture is growing as members weigh the importance of immediate demands against the risk of having no league to play in at all. The WNBA faces the risk of significant self-inflicted damage at the moment of its greatest success. A prolonged strike could drive fans toward other sports, halting the league's progress indefinitely. The organization requires a unified vision to navigate these negotiations, yet it remains caught between the immediate demands of its veterans and the future interests of its rising stars. The upcoming vote on the next proposal will likely determine the league's direction and whether the younger generation will begin to exert more influence over the league's destiny. The tension within the league is further exacerbated by the specific mechanics of the current collective bargaining agreement, or CBA, which the players recently voted to opt out of. By choosing to terminate the agreement early, the union has effectively set a deadline of October 2025 to negotiate a new deal. If a compromise is not reached by then, the 2026 season could face a total work stoppage. This move was a calculated risk, driven by the belief that the league's economic landscape has shifted so dramatically that the old rules no longer apply. For years, the WNBA operated under a model where revenue sharing only occurred after the league met certain high financial benchmarks that were, for a long time, considered unreachable. Now that the league is exceeding those targets, the dispute has shifted to exactly how that surplus should be divided and who should be the primary beneficiaries of this newfound liquidity. Central to this negotiation is the debate over the hard cap system. Unlike the NBA, which utilizes a soft cap, allowing teams to exceed salary limits through various exceptions and luxury taxes, the WNBA operates under a rigid ceiling. This prevents wealthier franchises from spending significantly more on talent than their competitors, a policy designed to maintain parity. However, players argue that this restriction artificially suppresses wages at a time when franchise valuations are skyrocketing. The veterans in particular are pushing for a transition to a more flexible cap structure that would allow for supermax contracts, which could finally bring top salaries closer to the seven-figure mark. The resistance from ownership stems from a long-term view of sustainability. Many owners point to the decades of operating at a loss and insist that the current windfall must first be used to pay down debt and invest in infrastructure, such as dedicated practice facilities and improved medical staff, before it is funneled into player salaries. The logistics of team travel have also become a significant point of contention. For the first time in history, the league has committed to providing charter flights for all regular season games, a move that costs an estimated $25 million annually. While this was hailed as a victory for player health and safety, it has created a secondary conflict regarding the salary pool. Some members of the union leadership have pointed out that the money spent on private jets is money that isn't being added to the base salary of the players. This has created a nuanced divide between the league's stars, who prioritize the recovery time and privacy provided by charters, and the bench players, who would prefer the cash equivalent in their paychecks. It is a classic labor struggle where the benefits for the few are being weighed against the basic needs of the many, and the lack of consensus is slowing down the union's ability to present a unified front to the commissioner's office. Furthermore, the prioritization clause remains one of the most divisive issues in the locker room. This rule requires players to return from their international seasons by the start of the WNBA training camp or face significant fines and eventual suspension. For decades, WNBA players made the bulk of their income playing in Europe, China, or Russia during the winter. The prioritization clause was designed to force players to make the WNBA their primary professional focus, but it has disproportionately affected veterans who have established lucrative careers abroad. Younger players who are entering a league where domestic endorsement deals can now exceed overseas salaries are less concerned with this restriction. The veterans, however, see it as an infringement on their right to work and a direct hit to their lifetime earnings. They are demanding that the clause be struck from the next agreement, while the league views it as essential for maintaining a professional product that starts on time and rewards domestic fans. The influence of the NBA's Board of Governors cannot be overstated in these proceedings. Because the NBA still owns a 42% stake in the WNBA, the senior league's owners have a massive say in how the WNBA's new capital is spent. These owners are often more conservative than the WNBA's independent owners, viewing the league through the lens of a long-term investment that is only just beginning to break even. This creates a friction-filled hierarchy where Commissioner Kathy Engelbert must balance the demands of the players with the expectations of some of the most powerful billionaires in global sports. The players feel they are being treated like subordinates to the NBA's bottom line rather than partners in a booming enterprise. This feeling of being perpetual juniors has fueled the aggressive rhetoric coming from the union as they seek to decouple their financial destiny from the NBA's oversight. The introduction of expansion teams like the Golden State Valkyries has added another layer of complexity. The $50 million expansion fee paid by the Golden State ownership is a massive injection of cash, but it also triggers an expansion draft. For a veteran player, an expansion draft is a moment of extreme professional instability. It means that after years of building a home and a brand in one city, they could be forcibly moved to a new market to help anchor a startup franchise. The veterans are pushing for increased no-trade protections and higher relocation subsidies in the new CBA, recognizing that as the league grows from 12 to 15 or 16 teams, their job security becomes more precarious. The younger stars, conversely, often welcome the expansion as it creates more roster spots and increases their visibility in new high-tech markets like the Bay Area or Toronto. The shift in the media landscape is also altering the leverage in the room. The transition from traditional cable broadcasts on ESPN to streaming-heavy packages with Amazon Prime and NBC means the league is now chasing a younger, more tech-savvy demographic. This shift favors the younger, more social media-active players who drive engagement and subscriptions. Media partners are increasingly interested in lifestyle content and behind-the-scenes access, which the younger generation is more comfortable providing. The veterans, many of whom came up in an era where they had to be guarded and protective of their private lives, are finding themselves at a disadvantage in a market that rewards overexposure. This has led to a disparity in off-court earnings that is even wider than the salary gap, further isolating the older generation of players who feel they are being phased out of the very league they helped build. Behind closed doors, the role of marketing agreements is another simmering issue. The league currently offers a limited number of these agreements, which pay select players extra money to stay in the United States during the off-season to promote the WNBA. Critics within the union argue that these deals are essentially under-the-table ways for the league to supplement the income of its most popular stars without raising the salary cap for everyone. There is a growing demand for these marketing funds to be distributed more equitably, or for the criteria for receiving them to be made transparent. As it stands, the veterans feel these deals are being used as a carrot to reward marketable younger players, while the grinders who provide the league's defensive backbone and veteran leadership are left out of the bonus pool. The medical and retirement benefits currently offered by the league are also being scrutinized. In previous eras, the focus was simply on survival, making sure the league didn't fold. Now that survival is no longer in question, the focus has shifted to life after basketball. The younger cohort is pushing for vesting schedules that allow them to access pension funds earlier, as well as improved maternity and fertility benefits. The WNBA has made strides in this area, including full salary for players on maternity leave, but the union wants to see these protections expanded into the new CBA as permanent fixtures. The veterans, many of whom have already passed their childbearing years or are nearing the end of their eligibility for pension increases, are more focused on immediate healthcare coverage that extends beyond their retirement date. They are acutely aware of the physical toll the game has taken on their bodies and are terrified of being left with mounting medical bills once their playing days are over. There is also the matter of the revenue-sharing trigger. Under the current rules, players only receive a portion of incremental revenue once the league exceeds its financial targets by 20%. This trigger has been a major point of contention because for most of the league's history, it was mathematically impossible to hit. Now that the league is far exceeding those projections, the players want to lower the trigger or eliminate it entirely, moving toward a true 50-50 revenue split similar to the NBA. The owners argue that a 50-50 split is only fair if the players also share in the losses and the capital expenditures, such as the costs of marketing, stadium leases, and the massive production costs associated with broadcasting. This debate over gross revenue versus net income is where the most intense legal battles are being fought. As the negotiations progress, the shadow of the 1998-99 NBA lockout looms large. That stoppage resulted in a loss of games and a significant dip in fan interest that took years to recover. The WNBA is in a much more fragile position. While its growth is explosive, its new fan base is not yet sticky. Many of the millions of people who tuned in to watch the 2024 season are fans of specific individuals rather than the league itself. A lockout would test the loyalty of these new viewers. If they can't watch their favorite stars on the court, they may simply move on to other forms of entertainment, leaving the WNBA with a multi-billion-dollar media deal and no one to watch the games. This is the ultimate nuclear option that the union leadership is holding, but it is a weapon that could just as easily destroy the players as the owners. The internal polling within the Players Association suggests that while the authorized strike vote was nearly unanimous, the actual appetite for a long-term walkout is far lower. Many players, particularly those in the middle of the roster who earn the league average of roughly $120,000, cannot afford to miss a season of pay. Unlike NBA players who have millions in the bank to weather a lockout, the average WNBA player is still living paycheck to paycheck relative to other professional athletes. The owners know this. They are betting that as the deadline approaches, the financial reality of the situation will force the rank-and-file members of the union to break ranks with the veteran leadership. The situation is further complicated by the emergence of independent ownership groups. In the past, almost every WNBA team was owned by its NBA counterpart. Today, teams like the Seattle Storm and the Chicago Sky are owned by independent groups who don't have the deep pockets of an NBA franchise to fall back on. For these owners, a strike isn't just a corporate headache, It's a threat to their entire investment. They are often more willing to negotiate on certain points, but they are also more vulnerable to the league's rising costs. This has created a league within a league, where the interests of the NBA-backed teams and the independent teams are not always aligned. The union is attempting to exploit these cracks in ownership, but so far the owners have remained remarkably disciplined in their public messaging. As the 2025 season approaches, the pressure will only increase. The league is planning to announce more expansion cities, possibly including Portland or Denver, which will bring in hundreds of millions more in expansion fees. The players will see this money and demand their share. The owners will see this money and want to use it to stabilize their balance sheets. The fans will continue to buy tickets, unaware of the structural collapse that is being discussed in boardroom meetings and on contentious Zoom calls. The WNBA is a league that has spent its entire existence fighting for a seat at the table. Now that it finally has one, it is discovering that the fight for the food is often more vicious than the fight for the seat. The next few months will likely see a flurry of spirited negotiations. The union will continue to point to the record-breaking television ratings as evidence that the players are the ones creating the value. The owners will point to the rising costs of operation as evidence that the league is still in a build phase. In the middle are the players who are caught between two worlds, the veterans who want to be compensated for the years of struggle, and the rookies who want to ensure the league is still there when they reach their prime. It is an economic and generational standoff with no clear precedent in professional sports. Ultimately, the resolution of this conflict will depend on whether both sides can move past the grievances of the past and agree on a realistic vision for the future. If the veterans insist on a payout that the league cannot yet sustain, they risk killing the golden goose. If the owners refuse to acknowledge that the players are the primary drivers of this new wealth, they risk a talent exodus or a catastrophic strike. The WNBA has reached its destination, but the internal map is being redrawn in real time. The old heads are holding the compass, the rookies are providing the fuel, and the owners are steering the ship. If they can't agree on a direction, the most successful period in women's sports history could end before it ever reaches its peak. This is not a story of a league failing, it is a story of a league struggling to handle its own success. The growing pains are visible in every tense interview and every stalled negotiation. The world is watching to see if the WNBA can grow up without breaking apart. The coming months will determine if the league's golden era is a permanent shift in the sports landscape or a fleeting moment of brilliance that was extinguished by the very people who created it. The stakes are higher than they have ever been, and the margin for error is non-existent.